JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 21st of December 2020. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So you feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts. First of all, let me start from the analysis, of course, that I did last week and the week before that. Basically, I kind of stick to the same idea still. We can see that the index Nikkei 225 here is still trading within this little range here, roughly between the 26,405 zone on the downside and the 26,890 level on the upside. Now, previously also I talked about this little short-term upside line drawn from the low of the 8th of December, which we can remove right now basically, and we can see that so far, yes, the index continues to move sideways here, and in order to aim for some higher levels, we still need that nice daily close above the 26,890 level, because as you can see today we did get a bit of a push here above it, but fractionally, but didn't really remain above this area, and it drifted back down. So what we're gonna do now here is we're gonna still play the waiting game and wait for a breakthrough one of these levels first in order to consider the next short-term directional move. Hong Kong's Seng Index. If you remember last week also I've mentioned about this idea that the index seems to be trading within a short-term falling channel here. As you can see so far, everything's kind of moving inside that pattern. So if you want to look at some lower levels, we would probably like to see a drop below this hurdle right here, the 26,256 mark. I talked about this level previously. That was that's the low of the 7th of December, near the low of the 8th of December, and you can see that it also acted as a good area of support today. So basically just kind of proving the point that it's an important one to watch. As I said, yes, we are moving within the falling channel, so in a way, as long as the boundaries of that pattern remained intact, then yes, there is still a chance for this one to drift further south. But as I said, to get a little bit more excited with that idea, I would prefer to see a drop below this 26,256 territory first, because as you can see, even today, like I said, it did get a nice hold up here. Ideally, also as I mentioned, a daily close here would be better, not only just a false breakout. That's what I basically don't want to see. So yep, like I said, yeah, a nice daily close below this hurdle, yep, could increase the chances for a further move lower. In terms of the upside, now of course we need to see a break of the upper side of the falling channel first, and just to kind of strengthen the upside scenario, maybe a push above this little hurdle right here, the high of the 11th of December here, near the 26,704 mark. A nice good pop above it may open the door towards the highest point of November here near the 27,040, or even above that. But again, for now, guys, we're leaning a little bit more to the downside. However, we need that daily close below this hurdle right here, the 26,256, in order to aim for some further declines. Now jumping into oh, by the way, Hong Seng as well. One thing just to kind of point out as well. Let's see how this whole area plays out right here, because what I don't really want to see here is a potential kind of inverted head and shoulders pattern. But again, that's too early to talk about that, but just something for you to keep in mind, guys. Just like I said, that's why I would prefer to wait for a drop below this area and the close below this area first, and then kind of aim for some lower areas. Because if this area somehow continues to provide support and we see a reversal back up here and we get a break of this, well, at this area right here, which could be classed as a neckline, then yes, we'll get ourselves a nice little short-term kind of, or not short-term, but a little small inverted head and shoulders here pattern. But again, a lot of confirmation needs to be done first. So the main scenario for now is slightly to the downside. Now the German DAX here drifted lower on Friday, and it failed to kind of climb to that 13,795 territory, failed to reach that area. That's the highest point of this year so far, and you can see that it drifted back down. And if we take a look at the cash index and where it's currently sitting at, we'll see that the price is drifting to the downside, guys, and the price is currently sitting near the 13,462 mark, and basically not far, well, actually just fractionally above this area, this key barrier that I talked about previously. Now it could be seen as a potential area of support. At the moment, all eyes are going to be on this area. If that gets broken, if we see the daily candle remaining below this area, guys, today, then, well, I mean, we could go for a bit of a larger correction to the downside. So keep your eyes on that one. DXY, another index, but this one's the dollar index, and look at this beautiful move here. I mean, this very quietly, DXY is starting to pick up the pace, which of course is having an effect on some of these other assets. I'll go to that in a bit, but yep, at the moment all eyes are going to be on this downside line taken from the high of the 4th of November, which if broken and we see the price climbing above the 90.59 territory right here, or even let's round it up towards the 16, so 90.60, if we get a nice push and a kind of the daily candle remaining above that area, then I'll aim for I'll continue aiming for the upside here a bit more. Still, don't get me wrong, the overall trend is still to the downside, but this could lead to a bit of a larger correction. So all eyes are going to be on this downside line and this 90.60 level today. Now gold. Gold is, well, this is where the situation is a little bit complicated, and gold is picking up the pace, picking up interest due to a bit of weakness in the equity markets. Not the kind of the dollar strength here. The dollar strength is not really kind of working out here for the gold bears. And you can see that yes, after we had a nice reversal from this 1899 level, I talked about this. Sorry, 1875 level. I talked about this, guys, last week, and yes, it did move lower. It did drift slightly below it, but as you can see, it got pushed back up here, and yep, we're now kind of we're now testing this 1899 territory. So now the big question here is, can we see a further move higher? Of course, also will depend on DXY, because if somehow DXY pops heavily to the upside, but let's say the equity markets don't move that much to the downside, yes, we could see gold maybe kind of correcting a little, or should I say staying maybe somewhere around this area here near that 1900 level, because if the equity markets start drifting heavily south, now this is where gold could ignore the stronger dollar and kind of could push kind of further north, guys. So again, be very careful on that one. So let's see how this is going to play out. For now, I'm still a little bit more bullish than bearish, but given that we are near this key resistance barrier right now, this 1899 level, or in a way we could round it up towards 1900. Yep, I would like to see that daily candle remaining above that area, and in order to kind of get a little bit more excited with higher levels. Now, my next target probably is going to be not this 1911, but 1933 mark, which is marked by the high of the 12th of October and it's near the inside swing low of the 6th of November, and then yes, we'll take it from there. Now, jumping into silver very quickly. Silver is moving nicely to the upside. I mean, look at this beautiful move today. Last week it stayed below this 26 territory, but this morning we are seeing a further push higher. And my next target, as I've mentioned to you guys last week, is the 27.62 territory, marked by the high of the 15th of September. In terms of a further push higher, I mean, let's keep it short and simple, guys. For now, I'm going to target this area. Let's see if it reaches that, if it kind of provides good resistance, and we might see a bit of a corrective move lower, given the fact that we have kind of distanced ourselves from this little short-term upside support line drawn from the low of the 30th of November. So maybe a bit of a corrective move lower could be possible, especially if DXY starts popping higher and the equity markets don't slide too much. So something for you to keep in mind. Yeah, let's see how this is going to play out near this 27.62 territory. Jumping into WTI Oil. Now, the one which is really kind of reacting here nicely to the, or I wouldn't say actually nicely, but reacting negatively to the stronger dollar is, of course, the oil market. And yep, you can see we're having a drift lower. Now, last week, what I talked about was that if this 48.64 territory, which is the highest point of March, gets broken, my next level is the roughly around the 49.42 area, which is the low of the 4th and 5th of February, also not far from the low of the 10th and 11th of February. So as you can see, we just fell shy of a few points from reaching that. So basically this whole area kind of acted as a good resistance zone, and yep, we're seeing a bit of a move lower here right now, and let's see if this upside line can provide support. Now, this upside line is drawn from the low of the 2nd of December. And if it does provide the support, then yes, a nice rebound here and a push higher could be possible. However, if this upside line gets broken and the price falls below the 46.24 territory right here, now that's where it could become a little bit more tricky for the bulls, because we could go for a bit of a maybe a larger move to the downside here, especially if the price is also placed below the 21-day EMA here, shown as the yellow line, guys. So something for you to keep in mind. Ripple is stuck. However, it's stuck slightly on in the positive territory. So because it's currently trading above all of its EMAs here, the 21-day EMA, the 100-day EMA, and the 200-day EMA. Of course, that gives a bit of hope here for the buyers. But given that Bitcoin is kind of, yeah, it is rallying, guys, but let's be very cautious with that, because if suddenly Bitcoin starts falling off the cliff, well, I mean, it could drag all the other cryptos after it. So maybe not drastically as it could be Bitcoin could, but still they could follow suit. So for now, the way I can look at this, and the way I will look at this right at the moment, of course, I'm going to keep an eye on the high of the December. I think that's the highest point of December. Let me just quickly double check. No, that's not the highest point of December. That's the high of last week, near the 0.6561 zone. Of course, don't get me wrong, it's way too much area here to miss out on. So maybe I would look at the Sunday's candle, for example, here, and I think it's yeah, roughly around, let me just double check. Yes, not far. So maybe even actually this 0.5880 territory could be the one to watch. Now, this is the high of the 11th of December. Also, you can see that last week and last week, basically, the crypto failed to overcome, or should say, failed to stay above this hurdle, above the 0.5880, and it kind of drifted back down and kind of stayed below this. I mean, kept getting these overshoots, these false breakouts, but didn't really stay above the 0.5880. So that's the high of the 11th of December. So maybe this level is the one to watch for now. I'm probably going to take that. Yes, it seems to be reasonable. So if we get a nice daily close above this hurdle, then I'll get a little bit more excited with a potential move towards the highest point of last week near the 0.6561 territory. Now jumping into AUD NZD here, and here the pair, basically quick update on this pair, because last week I talked about it, and what I was saying that in order to consider the next short-term directional move, we need that breakthrough one of these lines. Now here, either the downside line here, this medium-term downside resistance line drawn from the highest point of August, or we need to see a break of this short-term tentative, well, no longer maybe tentative, but a short-term upside support line taken from the low of the 2nd of December. For now, you can see that we're still stuck here. There was a small attempt today to overcome it. Yes, we did, but again, it drifted back down, so we're now stuck in between these two lines. So wait for another violation and wait for that daily candle maybe to stay outside of these lines here, either above this downside line or below this upside one, and then we could maybe consider the next short-term directional move. So keep your eyes on that one. Of course, USDCAD, DXY is moving a little bit to the upside. USDCAD is benefiting from that. As you can see, it pushed higher. And last week, if you remember, I talked about this downside line taken from the high of the 2nd of November, which got broken. Yep, now the and also the rate kind of today, you can see, popped heavily above this 1.2793 territory. So the only little issue here is that it got a hold up near this 21-day EMA, as it did, for example, here back in the around mid-November and second half of November, where this 21-day EMA kept on acting as a strong area of resistance. So what we would like to see here is a stronger move, given that we already had the move above this 1.2793. Yes, we had a decent push higher. However, let's be a little bit more on the safe side. Let's be a little bit more on the careful side. And if we get that daily candle kind of remaining above this 21-day EMA, my next target is the area near this 100-day EMA, shown as the green line, guys. So if by any chance the rate starts reversing back down and drops back below the 1.2793 territory, now that's where maybe I'll start looking at some lower areas. First of all, I'll get rid of this downside line, or actually, let me just redraw this very quickly. So because something to keep in mind still, guys, is this downside line, a bit of a tentative one, but nevertheless a medium-term downside resistance line taken from the highest point of March. It's not far from that 100-day EMA, as you can see here. So let's see how this is going to play out. Like I said, that's going to be my next target here. If we see that daily candle on USDCAD staying above this 21-day EMA. GBPUSD, quick update here. Sharp decline. I mean, as you probably are aware, Britain kind of imposed some more stricter kind of measures on the whole kind of movement inside the country, and we do have a bit of other countries kind of limiting the kind of the travel between the countries, between Britain and Europe. So some European countries kind of restricted the travel to and from Britain. So yeah, the pound is taking a hit in that. Of course, also with the fact that there's still no deal, no Brexit deal kind of reached, or should I say final deal, final agreement on some issues that remain. Yep, of course, you can see that the pound is taking a major hit, comparing it to last week's good push higher, and everything's excuse me, everything's kind of working out according to my TA analysis that I that I did last week. And yep, what I was saying, that if it starts dropping back below the 1.35 1.3483 territory right here, which is marked by the highest point of September, then yes, I'll aim for some lower areas. And to be honest, I didn't really expect it to happen that quick. Well, I mean, we'll take that. Now the big question here is, can the pair remain, can this daily candle, for example, remain below the 21-day EMA? Because it's already broken, it's early in the morning, and of course, don't get me wrong, a bit of retracement could be possible. However, be very careful, guys, for now. I mean, it could, because we're going into this really unstable period for the British pound, well, we could maybe expect some surprise moves, sharp moves, either up or down, guys. And if you're try to sometimes, if you try to counter trade, sometimes, well, it could be a bit of a disaster, guys. So that's why don't rush into anything yet on this one. Maybe try to find some other, let's say, instruments. However, if you do feel comfortable with trading such huge moves, then by all means do that. However, always have your stop loss in place, guys. I cannot stress that enough. Because again, if you get stopped out, don't worry, because again, it's a difficult period, because like I said, because of the the whole kind of problem still with Brexit. So the pound could be the best kind of a reflection of that situation. So yeah, at the moment you can see that not everything is going well. GBPUSD is falling down right now, but now for me, what's important here is to see how this daily candle is going to end up being today, because in relation to this 21-day EMA. If we stay below it, further declines are possible, but if we climb back up, maybe a bit of a reversal here to the upside could be possible again. GBPJPY also, you can see it failed to move above this key resistance area. I talked about this previously. And what I was saying, that I need to see a nice, good, strong move, and I would like to see the daily candle remaining above this 140.31 territory, but that didn't happen. And instead we're having a stronger reversal back down. So basically, from the technical side, we can see that the pair is kind of stuck in a little range here, roughly between these areas right here. So this is the lower bound right now. As you can see, the pair is drifting towards that lower bound of the possible range here. Last week, if you remember, when I talked about GBP yen, I said that if we drop back below the 138.28 zone, then yes, I'll aim for some lower areas. But at the moment, yes, I mean, everything's working out nicely. But at the moment, all eyes are going to be on this lower side of the potential range here. And finally, EURUSD. So drifting nicely to the downside. Of course, stronger dollar is the culprit of this move here. And yep, well, now the big question here is, can we actually go all the way here towards this upside support line drawn from the low of the 4th of November? Now, again, this move lower is considered a little corrective move. Again, it could continue drifting lower here, but keep your eyes on this whole territory, this upside support line, this 21-day EMA right here, and then yes, we'll take it from there, guys. But if that gets broken and we see the rate falling below the 21-day EMA and below the 1.2078 territory right here, which, as you can see, acted as a very nice area of support here back on the 7th, 9th, and 10th of December, then yes, I'll aim for larger extensions to the downside. But at the moment, it is considered still to be as a temporary correction. So let's see how it plays out near this upside line. So, guys, I'll have to wrap it up here. Thank you very much for watching and listening. I hope you found it useful, guys. I hope you really enjoyed it. I really appreciate your time joining in to this session, guys. I mean, we are at a very interesting period right now. Although we don't have much economic data coming out, let's say, this week, we do have some. There are a few GDP figures coming out from the US, Canada, so final ones, and some initial jobless claims. That's something to watch as well from the US. But in general, the kind of the main focus will be around the whole kind of aid package in the US. I mean, how it will go further. Of course, we know that it was agreed over the weekend, but yeah, there could still be some obstacles. Nothing really always runs very smoothly, guys. Unfortunately, that's the case. So yeah, so keep that in mind. And of course, yep, the Brexit saga. Let's see how that ends. I mean, somehow I don't think that it's going to end, but yeah, let's see how it develops this week, because I think that we might just go all the way up until the 31st of December. And yeah, the markets could be under a bit of pressure because of all that, especially the British pound. So yeah, guys, I hope you, like I said, you have a fantastic trading day. Join me later on my traders tea time. I'll pick up on some of these instruments, some new ones, just for a quick kind of brief overview, to see how it kind of ended up being today, trading today. But yeah, I hope you have a fantastic trading day, guys. Stay safe, and I'll see you later. Thank you very much, and bye-bye.